Question 1. Cybersecurity threats and vulnerabilities. Which of the following is the most common method used by cybercriminals to gain unauthorized access to an organization's sensitive information? A. Denial of service DOS attack. B. Phishing. C. Ransomware attack. D. Insider threat. Answer: B. Phishing. Explanation: phishing is the most common method of gaining unauthorized access to sensitive information. It involves sending fraudulent emails or messages that appear to be from legitimate sources, often tricking individuals into revealing personal information such as passwords or credit card details. Phishing is frequently used in social engineering attacks where attackers manipulate people into disclosing confidential information. Why no a DOS? A DOS attack is typically used to overwhelm and disable a service or network, not to access sensitive data. Why not C. Ransomware? While ransomware is a major threat, it is typically used for extortion after access is already gained, not for the initial unauthorized access. Why not D. Insider threat? Insider threats are indeed serious, but are less common than phishing, which can reach a larger number of victims through widespread social engineering tactics. Question 2. Risk management in cyber insurance. Scenario-based. Mr. Adams, the Chief Information Security Officer at Sizove, a mid-sized manufacturing company, has recently experienced multiple phishing attacks targeting his employees. He believes that his organization is at high risk of a data breach in the near future. Which of the following actions should Mr. Adams prioritize in his risk management strategy to prevent a potential breach? A. Deploying advanced anti-malware software on all employee devices. B. Providing cybersecurity training and awareness programs for employees. C. Implementing a more aggressive data retention policy. D. Enhancing physical security controls to prevent unauthorized access to servers. Answer: B. Providing cybersecurity training and awareness programs for employees. Explanation: in this scenario, Mr. Adams is dealing with phishing attacks which typically rely on human error to succeed. The most effective way to mitigate the risk of phishing is to train employees to recognize phishing attempts and follow proper procedures for dealing with suspicious emails. Cybersecurity training and awareness programs help employees understand the risks, how to recognize phishing attempts, and what steps to take when they encounter them. Why now are deploying anti-malware? While anti-malware software is essential for protecting against various threats, it does not specifically address phishing, which often relies on human behavior. Why not C. Data retention policy? Changing data retention policies may help manage data risks, but it would not directly reduce the likelihood of a phishing attack. Why not D. Physical security? Enhancing physical security is important for general risk management, but does not address the specific issue of phishing, which is an online threat. Question 3. Cyber insurance policy components. Which of the following is typically not covered under a standard cyber liability insurance policy? A. Business interruption due to a cyber attack. B. Regulatory fines resulting from a data breach. C. Costs associated with identity theft recovery. D. Reputational harm caused by a cyber incident. Answer: B. Regulatory fines resulting from a data breach. Explanation: cyber liability insurance typically covers financial losses and expenses resulting from a data breach or cyber attack, such as business interruption, recovery costs, and reputational harm. However, regulatory fines and penalties are usually excluded from standard cyber liability policies. This exclusion exists because regulatory bodies such as the GDPR or HIPAA impose fines and penalties based on non-compliance with laws, and these are not considered insurable losses in many cases. Why no business interruption? Business interruption is generally covered under cyber insurance policies as it involves financial losses directly resulting from the attack. Why not C. Identity theft recovery? Many policies include coverage for identity theft recovery costs, especially for individuals affected by breaches. Why not D. Reputational harm? Reputational harm is often covered under cyber insurance policies as it relates to the damage to a business's image following a cyber event. Question 4. Legal and regulatory aspects of cyber insurance. Which of the following is not a requirement under the General Data Protection Regulation (GDPR) for businesses to be compliant with cybersecurity standards? A. Implementing appropriate technical and organizational measures to ensure data security. B. Notifying regulatory authorities within 72 hours of a personal data breach. C. Offering compensation to individuals affected by a data breach. D. Appointing a data protection officer (DPO) for certain organizations. Answer: C. Offering compensation to individuals affected by a data breach. Explanation: Under GDPR, businesses must ensure data security through appropriate technical and organizational measures. A. Notify authorities within 72 hours in case of a data breach. B. And appoint a data protection officer (EPO) for organizations involved in certain data processing activities. D. However, offering compensation to individuals affected by a data breach is not a requirement under GDPR. While affected individuals may seek compensation through legal means, GDPR itself does not mandate direct compensation. Why not security measures? GDPR mandates that businesses implement sufficient measures to protect personal data. Why not? B. Notification. GDPR requires that data controllers notify the relevant authorities within 72 hours of detecting a personal data breach. Why not? D. DPO. The appointment of a DPO is required for certain types of organizations, especially those handling sensitive data on a large scale. Question 5. Cyber insurance policy components. Which of the following exclusions is commonly included in cyber insurance policies? A. Data breach caused by a third-party vendor. B. Losses resulting from a cyber attack conducted by a foreign government. C. Losses due to malware infection of personal devices. D. Losses caused by a failure to maintain adequate backup procedures. Answer. B. Losses resulting from a cyber attack conducted by a foreign government. Explanation. Most cyber insurance policies exclude coverage for losses caused by acts of war or terrorism, which often extends to cyber attacks launched by foreign governments. These exclusions are included because the risks of such attacks are deemed too high and difficult to insure. Why now? Third-party vendor. Cyber insurance typically covers third-party risks, including data breaches caused by vendors, unless specifically excluded. Why not? C. Malware infection on personal devices. Personal devices may be covered if the breach is tied to the organization's system, but many policies cover risks related to corporate devices. Why not? D. Backup procedures. Some policies may cover losses related to a lack of backup procedures, depending on the terms and endorsements within the policy. Question 6. Risk management in cyber insurance. When performing a qualitative risk assessment for a business, which of the following actions would not typically be included? A. Determining the likelihood of different cyber threats occurring. B. Estimating the financial impact of a data breach. C. Using historical data to calculate the frequency of cyber attacks. D. Ranking cyber risks based on their severity and likelihood. Answer. C. Using historical data to calculate the frequency of cyber attacks. Explanation. A qualitative risk assessment focuses on subjective analysis based on expert judgment, discussions, and rankings, rather than relying on quantitative data such as historical attack frequency. This type of assessment often involves estimating the likelihood and impact of risks and ranking them based on severity. Quantitative risk assessments would use historical data to calculate frequencies, which is why C is incorrect in this context. Why know a likelihood? Determining the likelihood of various risks is a key component of a qualitative risk assessment. Why not B. Financial impact? Estimating the financial impact is part of both qualitative and quantitative risk assessments. Why not D. Ranking risks? Ranking risks is a fundamental part of qualitative assessments, helping prioritize the most critical risks. Question 7. Cyber insurance for emerging technologies. Which of the following emerging technologies presents unique cybersecurity challenges that would likely be addressed by a specialized cyber insurance policy? A. Autonomous vehicles. B. Cloud computing. C. Social media platforms. D. Traditional on-premise data centers. Answer. A. Autonomous vehicles. Explanation. Autonomous vehicles present unique cybersecurity challenges because they rely on complex interconnected systems, including artificial intelligence, sensors, and cloud networks that must work seamlessly to operate safely. These vehicles can be vulnerable to hacking, data breaches, and malicious attacks, requiring specialized cyber insurance policies that address the unique risks posed by these technologies. Why not B. Cloud computing? While cloud computing does present cybersecurity challenges, these are generally covered under more traditional cyber insurance policies. Why not C. Social media platforms? Social media platforms face security concerns but do not pose the same level of risk and complexity as autonomous vehicles. Why not D. Data centers? On-premise data centers, while important, do not present the same emerging risks as newer technologies like autonomous vehicles. Question 8. Cybersecurity threats and vulnerabilities. Which of the following types of cyber attacks is characterized by the malicious encryption of an organization's data with the intent to demand payment for its release? A. Phishing. B. Denial of service (DOS). C. Ransomware. D. Trojan horse. Answer. C. Ransomware. Explanation. Ransomware attacks involve the encryption of an organization's data by cybercriminals, who then demand a ransom in exchange for the decryption key. These attacks can be devastating as they block access to critical systems and data until the ransom is paid. Why now? Well, phishing. Phishing is an attack method used to gain unauthorized access to information, not to encrypt data. Why not? DDoS. Denial of service attacks aim to make services unavailable but do not involve data encryption. Why not? Trojan horse. A Trojan horse is malware disguised as legitimate software, but it does not necessarily involve encryption or ransom demands. Question 9. Claims process in cyber insurance. Which of the following actions should an organization not take during the claims investigation of a cyber insurance policy after data breach? A. Immediately notify the insurance company about the breach. B. Begin working with forensic experts to determine the cause and scope of the breach. C. Attempt to handle the investigation internally without consulting experts. D. Preserve all affected data and evidence for analysis. Answer. C. Attempt to handle the investigation internally without consulting experts. Explanation. It is critical for organizations to work with forensic experts and external professionals during a cyber claims investigation. Trying to handle the investigation internally without expertise can lead to errors in identifying the cause, scope, and impact of the breach, which may complicate the claims process and result in insufficient coverage determination. Why now? Notify the insurance company. It is essential to notify the insurance company immediately after a breach to comply with reporting requirements. Why not? Forensic experts. Engaging forensic experts helps accurately assess the breach and understand its impact. Why not? Preserve evidence. Preserving evidence is critical for both forensic analysis and to meet the claims requirements of the insurance policy. Question 10. Advanced topics in cyber insurance. Which of the following technologies is most likely to play a critical role in enhancing cyber insurance underwriting by providing more precise risk assessment and pricing? A. Internet of Things. B. Blockchain technology. C. Artificial intelligence AI. D. Virtual reality VR. Answer. C. Artificial intelligence AI. Explanation. Artificial intelligence AI is playing an increasingly important role in cyber insurance, especially in underwriting. AI can analyze vast amounts of data in real time, identifying patterns and risks that can improve risk assessment and pricing accuracy. AI can help insurers predict potential cyber threats, model future risks, and optimize underwriting processes. Why not? While devices introduce new risks, they do not have the same direct impact on underwriting as AI. Why not? Blockchain. Blockchain can help with data integrity but is not as central to risk assessment and underwriting as AI. Why not? VR. Virtual reality is not typically involved in underwriting or risk assessment for cyber insurance. Question 11. Cyber insurance policy coverage. Which of the following is typically covered under a standard cyber insurance policy? A. Liability for intellectual property infringement. B. Costs associated with public relations efforts after a data breach. C. Property damage caused by a cyber attack. D. Lost revenue due to a physical disaster. Answer. B. Costs associated with public relations efforts after a data breach. Explanation. Cyber insurance policies generally cover costs related to managing the reputational damage that can result from a data breach, including hiring public relations experts to mitigate negative media coverage. Other items listed are typically covered under different types of insurance policies, such as property or liability insurance. Why not? Intellectual property. Intellectual property infringement is usually covered under general liability or intellectual property insurance. Why not? C. Property damage. Cyber insurance does not cover physical property damage. That would be under property insurance. Why not? D. Revenue loss from physical disaster. Losses due to physical disasters are generally covered by business interruption insurance. Question 12. Ransomware claims and payment. Under a cyber insurance policy, which of the following actions is most likely to be recommended following a ransomware attack? A. Paying a ransom immediately to prevent data loss. B. Ignoring the breach and continuing business operations. C. Notifying law enforcement and consulting with legal and forensic teams. D. Attempting to decrypt the files without professional help. Answer. C. Notifying law enforcement and consulting with legal and forensic teams. Explanation. After a ransomware attack, the most appropriate response is to notify law enforcement. such as the FBI, as well as engage legal and forensic experts. This helps ensure proper investigation and compliance with legal requirements. Paying the ransom immediately is discouraged as it does not guarantee data recovery and may encourage further attacks. Ignoring the breach is not advisable, and attempting to decrypt without expert assistance could make the situation worse. Paying the ransom could encourage further criminal activity and does not guarantee the return of the data. Ignore the breach. Ignoring the breach is never recommended as it exposes the organization to further harm. Decrypt without help. Unauthorized decryption attempts can further damage data and complicate recovery efforts. Question 13. Exclusions in cyber insurance policies. Which of the following is a common exclusion in cyber insurance policies? A. Losses caused by human error. B. Losses related to system upgrades. C. Costs for regulatory fines related to data breaches. D. Losses caused by natural disasters. Answer C. Costs for regulatory fines related to data breaches. Explanation. Cyber insurance policies often exclude coverage for fines or penalties imposed by regulatory authorities, such as those resulting from violations of data protection laws, e.g., GDPR fines. However, many policies may cover the costs of responding to regulatory investigations, including legal fees. Human error. While human error is a common cause of breaches, cyber insurance policies generally cover the costs associated with such incidents. System upgrades. Cyber insurance policies generally do not exclude costs for system upgrades, that they may not cover losses due to inadequate upgrades. Natural disasters. Natural disaster-related damages are typically covered under property or business interruption insurance. Question 14. Data breach response strategies. What is the primary role of a data protection officer (EPO) in an organization's cybersecurity strategy? A. Overseeing financial risk management. B. Ensuring compliance with data protection laws and regulations. C. Managing the internal audit process. D. Handling media relations and public announcements. Answer B. Ensuring compliance with data protection laws and regulations. Explanation. A data protection officer (DPO) is responsible for ensuring that an organization adheres to data protection laws such as GDPR. This role involves overseeing data privacy policies, monitoring compliance, and acting as a liaison with regulators. While a DPO might be involved in public relations in certain cases, their primary role is compliance. Financial risk management. The DPO's role is focused on data privacy and compliance, not financial risk. C. Audit process. While a DPO may assist with audits, their primary function is regulatory compliance. D. Media relations. Media relations are typically handled by PR or communications teams, not the DPO. Question 15. Risk mitigation and cyber insurance. Which of the following actions is most likely to reduce an organization's cyber insurance premiums? A. Increasing the number of employees with administrative access to sensitive data. B. Implementing robust cybersecurity controls such as firewalls, encryption, and multi-factor authentication. C. Disabling all security systems and relying on insurance to cover potential losses. D. Allowing unrestricted access to cloud services for all employees. Answer B. Implementing robust cybersecurity controls such as firewalls, encryption, and multi-factor authentication. Explanation. Insurers typically reward organizations that demonstrate a strong cybersecurity posture as it reduces the likelihood of a claim. Implementing controls like firewalls, encryption, and multi-factor authentication shows the insurer that the organization is actively reducing risk, potentially leading to low premiums. Administrative access. Increasing administrative access raises security risks and could increase premiums. C. Disabling security systems. Disabling security systems increases risk and would likely result in higher premiums or denial of coverage. D. Unrestricted access. Allowing unrestricted access to cloud services without proper controls would increase exposure and raise premiums. Question 16. Social engineering attacks. Which of the following is an example of a social engineering attack? A. A hacker exploiting a software vulnerability to gain unauthorized access. B. A cybercriminal impersonating a trusted figure to trick an employee into revealing sensitive information. C. A distributed denial of service (DDoS) attack disrupting network services. D. Malware being used to damage data on an organization's systems. Answer B. A cybercriminal impersonating a trusted figure to trick an employee into revealing sensitive information. Explanation. A social engineering attack involves manipulating individuals into disclosing confidential information or performing actions that compromise security. This can include phishing, pretexting, or impersonating a trusted figure. The other options describe different types of cyber attacks, such as exploiting vulnerabilities, A. DDoS attacks, C. And malware attacks, D. Why not A. Exploiting vulnerabilities. This is an attack that leverages technical weaknesses, not manipulation of human behavior. Why not C. DDoS. A DDoS attack aims to overwhelm systems with traffic and is not a form of social engineering. Why not D. Malware. Malware attacks involve malicious software, not the manipulation of individuals. Question 17. Cyber insurance and business continuity. Which of the following is a key component of a business continuity plan (BCP) in the context of cyber insurance? A. Regular updates of the insurance policy. B. A comprehensive backup and recovery strategy. C. Limiting internet access to employees during business hours. D. Engaging in media outreach to protect brand reputation. Answer. B. A comprehensive backup and recovery strategy. Explanation. A business continuity plan (BCP) focuses on ensuring that an organization can continue operations after a disaster or disruption, including a cyber attack. A backup and recovery strategy is crucial to restoring systems and data in the event of a breach or cyber incident, ensuring minimal downtime and damage. While insurance policies may be updated regularly, A. And media outreach, D. may help protect brand reputation. The core focus of the BCP is on recovery. Why no policy updates? Updating the insurance policy is important but not the central element of a BCP. Why not C. Internet access limitations? Limiting internet access is a security measure but not a direct component of business continuity. Why not D. Media outreach? Media outreach helps with reputation management but doesn't directly support continuity of operations. Question 18. Cyber insurance premium calculation. Which of the following factors is least likely to influence the calculation of cyber insurance premiums? A. The organization's cybersecurity protocols and risk management practices. B. The industry in which the organization operates and its exposure to cyber risks. C. The organization's financial performance and revenue. D. The organization's claims history related to cybersecurity incidents. Answer. C. The organization's financial performance and revenue. Explanation. Cyber insurance premiums are primarily influenced by cybersecurity protocols, the industry's risk profile, and the claims history of the organization. Financial performance or revenue, C, is typically not a direct factor, although larger companies might have higher premiums due to the larger scale of potential losses. Premiums are more directly affected by the perceived cyber risk of the organization. Why no other cyber protocols? Strong cybersecurity protocols help lower premiums by reducing risk. Why not B. Industry exposure? Some industries are more prone to cyber risks, which impacts premiums. Why not D. Claims history? A history of prior claims indicates higher risk and would increase premiums. Question 19. Business interruption and cyber insurance. Which of the following would not typically be covered under a cyber insurance policy that includes business interruption coverage? A. Lost revenue from a commerce site being down due to a cyber attack. B. Lost revenue due to a ransomware attack that prevents access to critical data. C. Lost revenue from a natural disaster that affects the organization's physical assets. D. Lost revenue from a cyber attack that disrupts access to cloud-based services. Answer. C. Lost revenue from a natural disaster that affects the organization's physical assets. Explanation. Business interruption coverage in a cyber insurance policy typically covers losses resulting from cyber incidents, such as ransomware attacks or system outages caused by a cyber attack. Losses from natural disasters affecting physical assets, C, are generally covered by property insurance, not cyber insurance. Why not E. Commerce downtime? This is typically covered under business interruption in cyber insurance if caused by a cyber attack. Why not B. Ransomware? Lost revenue due to ransomware attacks that lock critical data are generally covered under cyber insurance. Why not D. Cloud disruption? Disruptions to cloud services caused by cyber attacks would be covered by cyber insurance under business interruption. Question 20. Phishing attacks and insurance coverage. Which type of cyber attack is typically covered by a cyber insurance policy? A. Phishing attacks that lead to unauthorized wire transfers. B. Cyber attacks from hostile nation states. C. Data breaches caused by physical theft of devices. D. Attacks that disrupt the supply chain due to vendor negligence. Answer A. Phishing attacks that lead to unauthorized wire transfers. Explanation. Phishing attacks are one of the most common types of cyber incidents covered by cyber insurance policies, particularly when they result in financial losses like unauthorized wire transfers. These attacks typically fall under the category of social engineering attacks. The other options, B, C, and D, involve scenarios that may not be covered or may require specific causes in the policy to be covered. Why not B, hostile nation-state attacks? Cyber attacks from nation-states may be excluded or have limited coverage under many policies. Why not C, physical theft of devices? Physical theft is usually covered by property insurance, not cyber insurance. Why not D, supply chain disruptions? These may require specific endorsements, as they are not automatically covered under standard cyber insurance. Question 21. Cyber insurance and incident response. In the event of a cyber attack, which of the following actions is typically covered by a cyber insurance policy? A. Paying a ransom demand without reporting to law enforcement. B. Engaging a third-party forensic firm to investigate and contain the breach. C. Executing a public relations campaign without consulting a cybersecurity expert. D. Paying the full cost of hiring an internal IT team to prevent further breaches. Answer. B. Engaging a third-party forensic firm to investigate and contain the breach. Explanation. Cyber insurance policies typically cover the costs of incident response activities, such as engaging third-party forensic firms to investigate and contain a cyber attack. These experts help to identify how the breach occurred, mitigate further damage, and comply with regulatory requirements. Paying the ransom A and executing a PR campaign without expert consultation C are not recommended or fully covered actions. Paying internal IT teams D is generally not covered. Why now? Pay ransom. Paying ransom without consultation is risky and generally discouraged by insurers. Why not C, campaign without experts? PR actions may not be covered unless done in coordination with experts. Why not D, internal IT teams? Internal teams' costs are usually not covered unless explicitly stated in the policy. Question 22. Data breach notification. Under which circumstances is an organization required by law to notify individuals affected by a data breach? A. Only if the breach involves financial data. B. If personal or sensitive data is compromised and the breach meets certain legal thresholds. C. Only if the breach occurs in the healthcare industry. D. If the breach results in reputational damage to the company. Answer. B. If personal or sensitive data is compromised and the breach meets certain legal thresholds. Explanation. Data breach notification laws require organizations to notify individuals if personal or sensitive data is compromised, provided the breach meets certain legal thresholds. These thresholds vary by jurisdiction but typically include the type of data and the number of individuals affected. Financial data A or healthcare data C alone don't necessarily trigger notification requirements unless they fall under specific regulatory frameworks like PCI-DSS or HIPAA. Why now with financial data? Financial data alone doesn't trigger notification unless it's part of a larger breach. Why not C, healthcare industry? Healthcare data has specific requirements under HIPAA but is not the sole factor in triggering breach notifications. Why not D, reputational damage? Reputational damage does not automatically require breach notifications. Question 23. Third-party vendor risk in cyber insurance. Which of the following is most likely to be covered by a cyber insurance policy for an organization affected by a third-party vendor security breach? A. Financial losses from the third-party vendor's negligence. B. Losses incurred due to the vendor's inability to deliver services after the breach. C. The cost of the vendor's business continuity planning. D. Cost of suing the vendor for breach of contract. Answer. B. Losses incurred due to the vendor's inability to deliver services after the breach. Explanation. Cyber insurance policies often cover losses resulting from a third-party vendor's failure to deliver services, particularly if that failure stems from a breach of their security. The policy may cover business interruption losses and other related damages. Financial losses due to the vendor's negligence, or suing the vendor D, would typically require separate legal action or commercial liability insurance. The cost of the vendor's continuity planning, C, is also not covered. Why not negligence? Negligence claims generally fall under liability insurance, not cyber insurance. Why not C, vendor continuity planning? Costs related to vendor continuity are the vendor's responsibility, not covered by cyber insurance. Why not D. Suing the vendor. Legal actions against the vendor would not be covered under cyber insurance unless part of a larger litigation endorsed. Question 24. Coverage for business interruption in cyber insurance. What is a common exclusion in cyber insurance business interruption coverage? A. Lost revenue due to a cyber attack that disrupts business operations. B. Lost revenue from cyber extortion demands. C. Lost revenue due to downtime of external cloud service providers. D. Lost revenue due to business disruption from a natural disaster. Answer D. Lost revenue due to business disruption from a natural disaster. Explanation. Business interruption coverage under cyber insurance typically covers lost revenue due to cyber incidents such as cyber attacks or extortion demands earned. B. However, disruptions caused by natural disasters D. are generally covered under property or business interruption insurance, not cyber insurance. Why no a cyber attack disruption? This is covered under cyber insurance business interruption. Why not be cyber extortion? Extortion demands are often covered under cyber insurance. Why not C. Cloud downtime? Downtime caused by cloud providers may be covered by business interruption, but typically only when caused by a cyber event. Question 25. Social engineering coverage in cyber insurance. Which of the following cyber threats is typically covered under a cyber insurance policy that includes coverage for social engineering fraud? A. Phishing attacks that lead to wire transfer fraud. B. Distributed denial of service (DDoS) attacks that disrupt network access. C. Malware attacks that destroy data on a company's server. D. Physical theft of laptops containing sensitive data. Answer A. Phishing attacks that lead to wire transfer fraud. Explanation. Cyber insurance policies that include coverage for social engineering fraud typically cover financial losses due to phishing or other social engineering tactics, such as wire transfer fraud. A. DDoS attacks. B. And malware. C. Are different types of threats that are covered by other aspects of the policy but not under social engineering fraud. Physical theft D of laptops would be covered by other policies, such as property insurance. Why not B. DDoS attacks are typically not covered under social engineering fraud policies. Why not C. Malware? Malware attacks are generally covered under different cyber insurance provisions. Why not D. Theft of laptops? This is typically covered by property insurance, not cyber insurance. Question 26. Regulatory fines and cyber insurance. Which of the following regulatory fines is most likely to not be covered under a cyber insurance policy? A. Fines for violating data privacy regulations such as GDPR. B. Penalties for failing to comply with industry-specific cybersecurity regulations. C. Fines for breaching environmental protection laws caused by a cyber attack. D. Fines imposed by government regulators for failing to report a data breach. Answer A. Fines for violating data privacy regulations such as GDPR. Explanation. Cyber insurance typically excludes coverage for regulatory fines or penalties resulting from violations of laws like GDPR. These laws impose penalties for failing to protect data or notify individuals of breaches. Other fines, such as those for cybersecurity violations or government-imposed reporting penalties, C and D, may be covered in some cases depending on the policy terms. Why not B. Cybersecurity regulations? Some cybersecurity regulations may be covered depending on the policy. Why not C. Environmental laws? Some environmental law violations can be covered if they result from a cyber incident. Why not D. Failure to report breach? This could be covered by a cyber insurance policy if the fine results from a failure to comply with breach notification requirements. Question 27. Cyber insurance policy structure. Which of the following is a primary component of a cyber insurance policy? A. Property damage coverage for physical assets. B. Business interruption coverage specific to cyber events. C. General liability coverage for non-cyber risks. D. Comprehensive automobile insurance for fleet vehicles. Answer B. Business interruption coverage specific to cyber events. Explanation. A cyber insurance policy typically includes business interruption coverage that specifically addresses losses caused by cyber events, such as attacks that disrupt business operations. While property, general liability, and automobile coverage may be included in other types of insurance policies, they are not standard parts of a cyber insurance policy. Why no property damage? Property damage is usually covered under general property insurance, not cyber policies. Why not C. General liability? General liability covers non-cyber risks and is typically a separate policy. Why not D. Automobile insurance. Automobile insurance covers physical vehicle damage, not cyber-related incidents. Question 28. Incident response timeframes. Which of the following is a critical timeframe under cyber insurance policy when responding to a data breach? A. Reporting the breach to law enforcement within 30 days. B. Notifying affected individuals within 24 hours. C. Engaging an approved third-party cybersecurity firm as soon as possible. D. Consulting with a PR firm within 48 hours. Answer. C. Engaging an approved third-party cybersecurity firm as soon as possible. Explanation. Most cyber insurance policies emphasize immediate engagement of an approved third-party cybersecurity firm to assess and contain the breach. Timeliness in reporting and remediation is critical for mitigating damage and complying with regulatory requirements. Delays in engaging experts could lead to claims denial or reduced payouts. Why not a law enforcement? While reporting breaches to law enforcement is important, insurance policies typically focus on engaging cybersecurity experts. Why not B? Notification timeframes. Notifying affected individuals must occur within legal timeframes, but insurance policies often emphasize incident response before notification. Why not D? Firm. PR firm consultations may not be as urgent as technical response and are not always required under cyber insurance policies. Question 29. Cyber risk management and premiums. Which of the following practices is most likely to reduce an organization's cyber insurance premiums? A. Allowing employees unrestricted access to all sensitive data. B. Using outdated antivirus software on corporate devices. C. Implementing strong access controls and employee training on cybersecurity best practices. D. Relying solely on insurance coverage without cybersecurity risk management. Answer. C. Implementing strong access controls and employee training on cybersecurity best practices. Explanation. Cyber insurance premiums are generally low for organizations with robust cybersecurity practices, including strong access controls and employee training. These practices reduce the risk of breaches, making the organization less likely to file a claim. Poor security practices and B. or relying solely on insurance. D. will likely increase premiums. Question 30. Data restoration and cyber insurance. Which of the following activities is most likely to be covered by a cyber insurance policy when a company experiences a ransomware attack? A. The cost of negotiating the ransom payment. B. The cost of rebuilding a destroyed data backup. C. The cost of hiring a new executive to manage cybersecurity. D. The cost of legal fees for potential litigation related to the attack. Answer. B. The cost of rebuilding a destroyed data backup. Explanation. Cyber insurance policies typically cover the cost of restoring lost or corrupted data, which includes rebuilding destroyed backups after a ransomware attack, while some policies may also cover ransom payments. They may not encourage or cover negotiating payments directly. Legal fees and hiring new staff, C and D, are generally not covered unless the policy explicitly includes such provisions. Why not? Negotiating ransom payments may be covered in certain policies, but typically do not include negotiation costs, as insurers tend to discourage paying ransoms. Why not C. Hiring a new executive. Hiring a new executive is a business expense and typically not covered by cyber insurance. Why not D. Legal fees for litigation. Legal fees related to litigation are often covered by liability insurance, not cyber insurance, unless related to breach, notification, or other specific incidents.